Avoiding this one bad financial habit has allowed me to get continuous, successful credit limit increases from Navy Federal and other financial institutions on a regular, consistent basis, and has improved my overall financial health altogether. It's very important to understand how to go about this particular financial habit so you're not stubbed in your growth with financial institutions and your total journey to wealth creation. Before we get into exactly what that particular habit is, I'd like to give you context on who I am so you know who you're getting this information from. I'm JP. I am a career financial services professional, a banker by trade, 13 plus year veteran in the industry. I have an active mortgage license. I have an active FINRA investments license, an active life insurance license, and I'm a small business specialist, assisting small businesses with their banking, cash flow, and lending needs. I help consumers as well. Anybody from just starting out all the way up to 6, 7, and occasionally 8 figures in net worth. My goal on this channel is to help give you the information that you need to maximize the financial resources available to you in this country. So you're getting this information from somebody who's advanced their own personal finances from a very bad place. Also somebody who has career professional experience day in and day out helping consumers and small business owners just like yourself advance their personal and small business finances. That having been said, that one bad habit when done improperly is going to be budgeting. Budgeting is one of those taboo words in the finance space that's just like dieting on the health side. It's just one of those words we all know is a necessity, but nobody wants to deal with it. The reality on the ground is budgeting is essential, but can be done improperly. When you think about budgeting, one of the first things that comes to mind is coupon shopping and completely slashing your expenses, putting an emphasis on reducing your spending. And when it comes to credit card approvals and credit card limit increases, honestly, there couldn't be any more of a backwards mindset to growing your relationship with financial institutions when it comes to credit cards and credit limits. Credit cards are designed as a spending tool. They are not a debt tool. I say that all the time. They are not intended for debt, though they can be used for debt. In most cases, they are not designed for debt. That's why they're so expensive when you borrow on them. They're a spending tool. They're intended for you to spend money on. And you're rewarded with credit cards and credit card companies when you spend more and more money on them. So when it comes to budgeting, what I want to correct for many of you or introduce to some of you who may not have thought about it this way or paid attention to it at all is, number one, when you talk about budgeting and slashing expenses, you are literally going against the grain of our economic system as a whole, and it's going to penalize you. As I just mentioned, the financial system, when it comes to banks and credit cards as a tool, are designed for you to spend money on. So if you're not going to be spending more money, if you're reducing the amount of spending you have, you're actually going against the grain of why credit limit increases come to play in the first place. The next problem is you have phenomenons in the economy like inflation that work against your budgeting. Now, before we get too far into this criticism or this critique, I am an advocate for being mindful, conscious, and in control of your spending. Don't get it twisted. I am not advocating for you to care less about what you spend, how you spend, and where you spend it. That is not true. It is important, paramount, that you have control over your spending. But I'm going to actually tell you the way that you need to go about this in a moment. That having been said, when you think about economic phenomena like inflation, something like inflation that on an average case basis is hovering around 2 to 3% per year, when it's tamed, that's compounded on an annual basis. When you turn around and think about the last 2 years at the time of this recording, this is being recorded in August of 2024, we've had record inflation, at least by a few decades highs, in the last 2 years or so of nearly 10% at its peak. So that's again compounded growth of the cost of goods and services. And even though those numbers have now at the time of this recording gotten down under 3% and it's at its overall averaged inflation, items are still 5, 6, 7, 8, and 9% inflation depending on where you look. So that in itself means that no matter how much frugality you practice, there's economic factors that are ensuring that you're not going to be able to do anything but run that hamster wheel until you pass out. Again, it does not mean not to control, monitor, and tame your spending and to be wise about your spending. What it means is you can only budget down so much. If you're looking to have healthy relationships with the financial institutions especially around credit cards and credit limit increases, you need to continue to grow your spending to meet your needs and your family's needs and your business's needs if you're operating a business. But you need to more importantly focus on your income. If you want an opportunity to truly grow your credit limit increases at a very healthy rate consistently, and I've done this actively, I also help my clients do this actively, then don't focus as much on your spending. Again, control it. What you want to focus on is keeping your spending as flat as humanly possible. But as it grows, because it will, if nothing else, inflation will grow your expenses. You don't have to do anything to get your car insurance to increase. It's actually one of the highest categories for inflation at the time of this recording. Go do your own research. Car insurance is one of the worst categories right now. Just as an example, and that's not something that you are going to go out and make more expensive yourself unless you're getting into accidents or something. But generally speaking, if you're not getting into accidents or traffic violations, you're not increasing your car insurance, but it still can be going up 5 to 7% per year, depending on what's going on in the economy. So as that goes up, or other expenses go up that may be getting reported on your credit report, that are beyond just your basic budget, that are influencing your underwriting on a credit card, your objective is to actually exceed that in income growth. That is how you want to approach it if you want to continue to grow your credit limits and grow your relationships with the bank. You need to tame your spending and show that you have control. But the best and most powerful underwriting tactic and most attractive thing you can do in the eyes of the bank is consistently grow your verifiable income source. So if your expenses are growing by 3 to 5% per year, then you want to push to make sure your income is growing by 5 to 7 or more percent per year. When you go to apply for a credit card and you put down on that application your information and they pull your credit report and gather all the data points and you have absolutely no monthly expenses reporting on your credit report, they're going to say, oh, that's great. If you turn around and say that you only make $5,000 a year, they're going to say this guy's got to be retarded. And that's just the reality on the ground. You can't allow not having expenses or not having high expenses to be your golden ticket to advance financial progression. It's not really a thing. You have to make sure you're earning significantly above your expenses for sure. But you can't focus more than 50%, 70, 80% of the idea, or even a lot of people, 100% of the concept of budgeting just means slashing expenses. And I'm teaching you right now, as somebody who takes credit card applications on the regular basis for consumers and small businesses, and actively has healthy credit card relationships on the personal and business side, of upper 5 on the personal and 6 figures on the business side, I am telling you that you're not being productive by budgeting your way to zero and keeping your income the same, especially with inflation. Banks are accounting for inflation with your income as well. So if your income is staying the same year after year as you're applying for credit limit increases, even though Navy Federal's flagship card may go up to an $80,000 limit at its peak exposure, you won't ever reach it if your income isn't growing and your spending isn't growing to justify $80,000 on a limit. So it is very important for you to understand that this economy is debt-based and consumer-driven, aka they want you to borrow money and they want you to spend it. This is what our economy at its crux is based on. So when you go to put in for your credit limit increases or applying for credit cards brand new, what you want to demonstrate is every time you go for that credit limit increase, your expenses are healthy, they're under control, but they're healthy, and your income is growing. And that could be incremental. It doesn't have to be crazy. So many people think that, increasing income to be impactful has to be tens of thousands of dollars, on a yearly basis or more. That's great if you can accomplish that. But I keep telling people that, I just covered a video on home affordability. A few $100s more a month, $3,000, $4,000, $5,000, $6,000 a year in the income increase, which is really a handful of hours a week more in income, if depending on how much you're making, can move the needle tremendously when it comes to debt products. When it comes to buying a home, credit limit increases on credit cards, just going from $50,000 to $53,000 a year in income with your other expenses and everything else, your credit report and every other factor being stable, can make a noticeable difference and getting you a higher credit limit and other success with financial institutions when it comes to debt products. So I wanted to put this out there because I had some content that triggered that for me, but I have clients that are always emphasizing cutting their expenses. And I rarely ever hear clients focused on growth. Like, what if your expenses are where they need to be based on your lifestyle and your needs? Then what happens? You can't stop inflation. You can't stop the rise in goods and cost of services. What you can do is arbitrage that spending with smart credit card usage and habits and increase your income. That is what you can control. So I wanted to put this in context for you guys. Some of you are advanced on this channel, as I already know. Comment down below and let me know that you can back this concept up with, showing your success with credit limit increases and overall growth when it comes to credit card limits and banking relationships. But for those of you who are newer, or this is a newer concept or topic, put your questions down below, or your thought processes down below, or your relationship with budgeting down below, so we can continue to have this conversation. I assure you, this economy is driven around growth and abundance mindset. It is not around shrinkage and deficit. Our government has not slashed their spending in millennia. And just to give you an example, corporate companies don't slash their spending very often unless it's just that bad and they start laying people off. They spend into oblivion with the intent to grow the business, grow the bottom line. The government spends in an intent to enlarge itself and also to expand the services provided and everything that it's responsible for. So the reality on the ground is that our economic system does not support the concept of trying to slash to zero while completely ignoring the development and growth of your income or your revenue. If you're a minimalist, then comment down below. More power to you. Carry on, sir or ma'am. Carry on. But for those of you who are looking to expand and grow your personal business or small business finances, trust me when I tell you, control your spending, but focus on the growth of your income and focus on optimizing how you spend your money. Comment down below. Let me know any thoughts, questions, comments, concerns, feedback, etc. All my pioneers, welcome back. To my new viewers, welcome in. I want you to continue to support the channel by commenting, sharing, and subscribing so this channel can continue to support and invest in you. To all my pioneers out there, I want you to stay focused, stay in motion. I'll see y'all soon.